Hi, everyone. Welcome back to another episode of FinanceFeeds Podcast. If you like our content, don't forget to like and subscribe and comment on our videos. I have a very special guest with me today. His name is Veljko Jelić. He is founder and CEO of Chainberry. Veljko, thanks for taking the time to sit down with us here in Cyprus today.
Thank you for inviting me.
So I would consider you a digital assets expert, being CEO and founder of Chainberry. So we're going to get deep into digital assets, crypto, stable coins, and all that fun stuff. I wanted to start off by saying that I think that a lot of brokers still think that accepting crypto assets means just adding a wallet address to their client's offering. And I wanted to ask, at what point does that approach actually break operationally for a broker that is starting to process real large volumes?
Yeah, you're correct, and this is one of the first issues actually that happen because people think just having a wallet is enough for having processing transactions with on a blockchain. So the thing here is that as soon as you get like few hundred transactions daily, this is already becoming like a problem because you have like financial checking of all those transactions. Then you have compliance checking, and doing this manually is really not something which can be sustainable at the higher frequency of the transactions. So this is why solutions like we have developed, which are basically making the whole process automatic, is now becoming more and more popular in these large volume businesses. Yeah.
And when we say automatic, can you elaborate a little bit on what that means specifically?
Well, you have several things happening in the background when there is a blockchain transaction, especially in this kind of, let's say, enterprise solutions. So first you have the wallet, which is generated like a one-time wallet generated for a client or specific transaction. And this has to be basically done like that in order to protect the system and other wallets from being affected of some bad money or some high-risk money which you don't want to accept.
Okay.
So then this is one thing you have to do. Then there is another thing which happens after the transaction is checked. And this is where you can apply some smart rules and you can have transactions handled in a different way depending on what their risk assessment is.
But I think I understand what you mean. For me as a layperson, let's say brokers are operating in different jurisdictions. There's certain regulations that, let's say, they need to follow with respect to AML, with respect to storing funds, etc., maybe some reporting standards. And clearly, I think Chainberry can automate that from, again, different regions, silo clients within specific wallets. I don't know if you can call it separate ecosystems within Chainberry, et cetera, right? I mean,
Yes.
We're talking about full flexibility when it comes to many different factors and variables, right?
Exactly. And one interesting thing actually to mention here is that we have developed our product with the help of some professionals exactly from Forex industry, for example, where we were highlighting some of their pains and wanted to just break them down and solve them. So one of them is obviously this compliance thing that you have to do. You have to check every transaction. You have to see what kind of assets you're accepting. And then this is causing a lot of manual work. I mean, this is especially in some industries where you have like higher risk, potentially higher risk assets, And in order to protect your business and keep compliant, you have to have these tools for checking all those transactions.
Yeah.
Now, we do automations here, so we can basically set a rule or set of rules, and then you can just let the system work for you and just manually review where the rules are not able to do this automatically. Yeah. And the same goes for financial parts. So in order to, for example, have multiple transactions swept to some wallet which you have where you want to hold your assets, this needs to be done in an efficient way when the gas fees are low on network. It has to be, in some specific networks, you have additional logic for energy that needs to be burned in order to sweep these transactions. And then eventually you want to maybe convert this to stable coins or to fiat, you want to withdraw it somewhere. So we do all of this automatically. We can make the routing the treasury, everything you want, just under your control completely.
Mm-hmm. You mentioned that, when you were building the Chainberry product, you relied on a lot of expertise and experience from Forex brokers themselves.
Mm-hmm.
I guess my question is, in terms of the Forex industry or Forex and CFD broker industry, what do brokers still underestimate the most with respect to, let's say, operational problems that could exist or could come about when accepting crypto payments? Because it seems to me like, again, you mentioned a lot of different variables already, but I think maybe there's certain things that brokers are aware of, but some that they may not be until they actually start working in large volumes with crypto.
Well, there's several things actually. For those who do not work with crypto yet, I think they're just missing out, and this is a hole in the business right now, and it's getting bigger and bigger because everyone is now starting to do this.
Yeah.
And then I would advise them really to just check out what the competitors do, check the solutions which are there to help them. Basically, these integrations are really easy and fast. You can have like crypto processing in a couple of days or a couple of weeks.
Yep.
When it comes to those who already have crypto transactions, who accept crypto deposits and then also payouts and everything, the thing is here that there is many different solutions on the market. Some of them are quite basic. Some of them are quite expensive also. So there's many opportunities here to optimize these expenses of crypto processing. And as I mentioned, since we did have a chance to work together with some Forex brokers on our solution, we managed to do this control of the assets and compliance-wise, and also with the prices and with the costs of everything, we managed to do it really efficiently. So I would say that for those who are looking to improve their systems or to cut costs on these systems, they should check out what we do and how we do that. So we're here to just consult also. I mean, our goal is not to just sell it if someone don't need it, but we want to consult people in how systems can work and what can be better for them, what to pay attention to. Maybe one of the main points here is that a lot of manual work within the Forex companies can be reduced or cut off completely with systems like ours.
That sounds great. Do you think that do you think that stablecoins are becoming a part of their treasury infrastructure? Stablecoins are becoming a part of their treasury infrastructure today, or are we not there yet? And kind of what solutions can Chainberry offer for brokers that do want to use stablecoins, not just to accept payments from clients, but use stablecoins to basically pay operational vendors and actually, run their business?
Yeah. So when it comes to stablecoins, the situation changed in the last couple of years. We all know that crypto had kind of a bad reputation, right? Because of being an asset which is available to the public and then being very volatile. There is many projects. It was really not easy to keep up with all the news, everything that's happening. Obviously, some bad actors also influenced this public opinion. There was a fear created around crypto and everything. But one thing we cannot underestimate, and this is how good this technology is actually. So, it is proven over the years that when we talk about crypto, and especially stablecoins, they're now becoming institutional assets which are being used for settlements, cross-border payments. And we have more and more cases where this is actually just replacing the old systems, because you have banking systems which are not working, after business hours, or you have weekends where you cannot transfer some money that you have, and maybe you need some liquidity and stuff. And this is exactly where crypto and stablecoins, especially, are solving the problem. So I would say that we can just look back at 2025 and see the reports about the transactional volume of stablecoins, which were more than 33 trillion compared to Visa and MasterCard combined processing of around 25 trillion. So it is obvious that stablecoins are there, and being used, and we cannot just close our eyes in front of this fact anymore. When it comes to the second part of your question, what can companies do in terms of using these stablecoins? This can be really a decision for a business if they want to withdraw these funds, if they want to convert it to fiat, if they want to use it for any expenses that they have. More and more companies are now accepting settlements in stablecoins. So this is definitely a case. And I think it's going to be seen more and more, But maybe one thing where companies are still being very careful is the regulatory frameworks, which we, work in. And so this technology is global, but then you have very fragmented regulation over the globe, So it's probably one of the things where everyone is being cautious a bit. But in this case, I can say that Chainberry is offering really completely compliant ways to work with crypto. You can have different custody methods, setups with us. We can have custody for you. We can have it done by a third-party licensed exchanges or other institutions that work with crypto. Or we can also have non-custodial approach where you are just holding your own wallets and your own keys.
Great. Awesome. I know that Chainberry is actively also working with, I would say, broker technology vendors, CRM systems, even PSPs. And I wanted to ask you, is this because you believe that crypto, stablecoins, any kind of digital assets are ultimately going to be embedded in the broker's sort of embedded model or module when it comes to payments? This a similar way that payment processing was something that was adopted by brokers many years ago when the industry started. Again, brokers in the beginning, I remember even from a regulatory standpoint, for example, you could accept debit cards, but you couldn't accept, for example, in certain jurisdictions, credit cards, for example. And is it because Chainberry believes that if we look into the future, crypto is inevitably going to be part of the payments module within brokers, within CRM systems, within traditional PSPs that exist out there in the industry?
Well, I would just go back to this previous point, which I mentioned, this fact that stablecoins are processing more than cards right now. So this is already a huge signal that this has to be considered, and I think that definitely yes. So crypto as a payment method. Is it just your solution as a tech provider, or you have it white labeled, or in any case, this is something that is going to become a default. And this is why we work with PSPs and we work with other technology providers so that we can just give them our technology to rely on. Not everyone is a blockchain expert, and in order to build these solutions, you need a lot of knowledge, a lot of experience, and time and money invested, right? So sometimes it's just easier to go with existing solutions, make a strategic partnership, and use what there is already on the market.
Awesome. So we've talked a lot already in detail about kind of how stablecoins are being adopted in the industry, sort of some misconceptions that brokers maybe have today about accepting crypto, using it as a payment method for their operations and things like that. I guess I wanted to ask you, in your experience that you see every day, how much hidden manual work actually still exists today for companies that are already using crypto, both to accept payments from clients and also to process payments, let's say operationally?
Yeah, we kind of mentioned this one in previous questions. And I think there is a lot of manual work, and people are not even aware how much of that actually can be reduced. Only when you see it actually work automatically, you're becoming aware that maybe you can really cut costs on those efforts. I mean, this is this is something we were really paying special attention to because knowing how to use the providers that we have and the technology that they have, we have built like the set of different smart features which can be used to control the system. And in this case, you can really just make a configuration that works for you, and then you can rely on the system to do things automatically where you're comfortable with this. And again, in some cases, for compliance or finance, they want to do things manually. Some things need a different set of approvals. So here we have to allow them also to do some manual work.
Veljko, one of the things that I've actually experienced or seen is where stablecoins specifically are actually being used sort of behind the scenes as a behind the scenes payment method. Sometimes in, let's say, a retail payment app or something like that, where again, the user needs to transfer funds for a specific transaction. Those funds do reach the merchant, right? But the end user, for all intents and purposes, doesn't actually even know that the transaction happened in stablecoin. They just know that they basically paid for a particular product or service. Do you see stablecoins as also being sort of adopted as a behind-the-scenes sort of payment method, where again, the user doesn't need to know his blockchain address, whether it's ERC or TRC or Solana network, et cetera, because ultimately things will be so, let's say, smooth in a sense that, again, it'll be a near instantaneous transaction. The user knows that, again, they transferred funds to pay for a good or service, and that's it, and they're done with it. They don't need to know all the complexities of what was the gas fee, how many seconds or minutes it took for the transaction to settle and things like that.
Well, that's actually interesting because, while you were asking the question, I was just thinking about the big players from the legacy industries, legacy payment processing, now using blockchain behind the scene, and this is exactly what MasterCard and Visa are doing now.
Yeah.
So sometimes you can pay with the card, and this transaction maybe happened on the blockchain without you knowing. Obviously, we cannot for sure say right now if they're utilizing this and where. But huge budgets from both these giants are being used to put their technology on blockchain, and they're working and financing different crypto projects.
The last question is, so when you meet brokers and PSPs at events like IFX Expo International here in Cyprus, what are the most common misconceptions that these companies that you hear from these companies still today when they talk to you about crypto payment infrastructure?
Well, you would be surprised how many wrong concepts are there, because, and it's not people. I mean, we should not blame anyone for this. It's just not having enough educational materials, probably, or campaigns or whatever. So I think we are to blame. We who are providing these kind of services. But I think this is going to change. And let me tell you about a couple of them. So first, as we mentioned earlier in our conversation, many of them think that if they have an account with someone, with some exchange or anything, and they have a crypto wallet, they think that's it. So we are covering crypto payments, right? So this is just one small piece of the puzzle, because you can accept some crypto payments, but this does not mean that you're doing a crypto processing on a larger scale. When there is a lot of transactions happening in a day, when there is a lot of volumes, when you have to include some different services in between and all this, and then control over this dashboard and treasury in the end. So I would say this is one of the most common mistakes that I hear about.
The reason why I'm asking is because I often hear, or a common misconception that I often hear is, like we talked about, we'll have 1, 2, 3 wallets, on an exchange or self-custody, whatever, right? And we're good. We just basically funnel payments in there, right? But when you're regulated, when you have to do KYC, when you have to do AML, and unfortunately in digital assets, AML is also an issue, just like it is in traditional payments, right? Yeah. Don't they run into an issue where if there is a certain payment that was flagged and it was deposited into a certain wallet, doesn't all the funds in that wallet maybe possibly get frozen and cause issues, and then you have issues in payments flow?
Well, that would happen if you do not have a solution like ours, which is built to actually protect you from all that. So, and you're right, this is one misconception, about the high-risk assets making spoiling or tinting all of your wallets or all of the assets that you hold. And this is exactly why solutions like ours are basically preventing any kind of uncontrolled damage to your wallets and your risk assessment, risk scores, right?
Yeah. And I'm guessing that you've not only heard about these kind of things, I would think that you've been approached by people who are like, hey, I have this issue. I have funds in a wallet that were deemed high risk, etc. And now they're causing me many, many issues. What do I do?
This happens. And I would say this was happening more in the past. Nowadays, we have quite developed, I would say, these forensic tools for KYT and AML are really very sophisticated now, and you're preventing anything bad from happening. This is really good that we have such a great development in this area, so that we can protect our clients. And by doing this, we are also increasing the trust in crypto and blockchain as a technology, right? Because you can say that this is really safe if you pay attention to details such as having those solutions in place.
Yeah, of course, absolutely. And I think part of the reason why I think your work is important is because ultimately it will lead to, we're all talking about global adoption. I think it's a big keyword, right? Global adoption of crypto. There's no doubt that it's happening, right? And I think companies like yours just ensure the fact that as we move along into the future, everything will work itself out and be, in the boxes that it all needs to be, just like traditional payments were when they were being developed, many, many years ago. So I think you're doing very valuable and important work. I know you're very busy. I know we've been to a ton of meetings and things like that. So I wanted to thank you for coming on our show and sharing your insights. And we wish you the best of luck along the way here in Cyprus and as you move forward.
Thank you very much, and thanks for having me. See you anytime.
It's a pleasure.